Good evening, everyone. On December 12th of 2025, a Swiss bank became the first in Europe to plug directly into Ripple's payment infrastructure. Not pilot, not a proof of concept, actual production operations. 3 weeks later, Deutsche Bank published a 43-page technical white paper on zero-knowledge proofs in banking with a blockchain firm called Nethermind. If you think this is just another blockchain hype story, think again. Let's start with what actually happened on December 12th of 2025. AMINA, a FINMA-regulated Swiss bank with a banking license from Swiss Financial Market Supervisory Authority, became the first European bank to integrate Ripple payments directly into core banking operations. Now, AMINA isn't new to crypto. They received their Swiss banking license in August of 2019, making them one of the first regulated crypto banks in the world. They also received an FSRA regulated branch in Abu Dhabi's global market. But here's what's different. This isn't a crypto company pretending to be a bank. This is a real bank with banking licenses, regulatory oversight, and institutional clients. They are plugging into Ripple's blockchain payment rails directly into their infrastructure. The technical setup here, AMINA can now process near real-time cross-border payments involving both fiat and stablecoins, including Ripple's RLUSD. So here's the strategic angle here. In Ripple's official statement, our partnership with AMINA Bank enables them to serve as an on and off ramp for digital asset innovators into traditional financial infrastructure. Now let's think about this for a second. AMINA's banking clients are crypto native companies, Web3 startups, DeFi protocols, digital asset firms. These companies need access to traditional banking services, cross-border payments, SWIFT transfers, regulatory compliance. But traditional banks won't touch them. They're too risky, too uncertain. AMINA Bank bridges that gap. They're crypto fluent and traditionally regulated. And now Ripple's infrastructure. They can reduce friction between blockchain-based operations and conventional banking rails. This isn't just Ripple winning one client. This is Ripple positioning itself as an infrastructure layer that connects crypto companies to traditional finance. Now, let's talk about the company most people have never heard of. Nethermind is a blockchain research and software engineering firm, but that doesn't capture what they do. They build institutional grade blockchain infrastructure. Now, let me give you some specifics. Nethermind develops Nethermind Ethereum client, one of the core execution clients that actually runs the Ethereum network. They received an Ethereum Foundation grant in 2018. They also built Juno, a Starknet full node client for zero knowledge proofs. They work on Ethereum's core protocol, the EIP 4337 account abstraction. They work on shards, Virtual trees, and so forth. But here's where things get interesting. Nethermind offers blockchain as a service for institutions. They provide enterprise-grade blockchain solutions with built-in security, compliance, and regulatory integration. They're not building consumer apps, they're building infrastructure layer that banks and enterprises can deploy. In December of 2025, just last month, one of Europe's largest banks published a white paper along with Nethermind called Zero Knowledge Proofs in Blockchain Finance: Opportunity versus Reality, 43 pages. Now, why does this matter? Because Deutsche Bank isn't just exploring blockchain, they're exploring how to solve the privacy problem in blockchain based finance. Zero knowledge proofs allow you to prove something is true without revealing the underlying data. Here's an example. You can prove you have sufficient funds for a transaction without revealing your account balance. You can prove you're KYC compliant without sharing your identity documents with every counterparty. The white paper analyzes real-world use cases for KYC, AML, compliance, proof of reserves, and digital asset custodians. Deutsche Bank's COO of digital assets, Joy Adams, said, "The need for standardization and clear best practices is coming to the fore." This can mean big opportunities for companies willing to take up these challenges. Now, let me break down why zero knowledge proofs are such a big deal for banking. The core problem with public blockchains is that everything is transparent. If I send you a transaction on Ethereum, anyone can see the amount, the address, and the contract interaction. For banks, that's a non-starter. Client confidentiality is legally required for most jurisdictions. But here's the regulatory catch-22. Banks also need to prove compliance, AML checks, KYC verification, sanction screenings. Zero knowledge proofs solve both problems simultaneously. Specific use cases for the Deutsche Bank white paper, I'll give you a few. You can streamline KYC. A customer proves they're verified without sharing any identity documentation with every new service provider. Here's another example. Proof of reserves. Digital asset custodians prove they hold the sufficient assets without revealing clients' positions. And then 3, zero knowledge rollups. You can basically bundle thousands of transactions together and prove their validity cryptographically without publishing all transactional data on chain. Here's something that Deutsche Bank's white paper mentions that I don't hear many people covering. Nethermind doesn't just build blockchain infrastructure. They build secure, production-ready AI agents and infrastructure that's tailored to enterprise systems. What does that actually mean? AI agents that can interact with the blockchain system securely and autonomously. Let's think. Automated compliance checking, intelligent transaction routing, fraud detection agents that operate at near real time. Nethermind calls it the verifiable autonomy. AI agents that can prove their actions cryptographically. For banks, this is huge. You can automate complex compliance workflows, KYC verification, sanction screening, transaction monitoring, while maintaining cryptographic proof that processes followed correctly. This isn't theoretical. Nethermind states they provide advisory to deployment services with compliant-ready architecture and continuous support. Now, let me help you connect the dots on the technical architecture. Layer 1 Ethereum mainnet provides the security and settlement layer. Nethermind builds Ethereum clients that institutions actually run. Layer 2, you have the zero rollups, right? Like Starknet. It handles high throughput transactions with cryptographic proof of validity, thousands of transactions per second with Ethereum level security. Nethermind builds Juno. We also have a privacy layer. You can enable compliant transactions without revealing sensitive data. Deutsche Bank is exploring this with Nethermind. Here's what most coverages are missing. The Zero Knowledge white paper isn't Deutsche Bank's only blockchain initiative. They partnered with crypto infrastructure providers like Bitpanda and Taurus. By 2026, Deutsche Bank clients will be able to custody cryptocurrencies, tokenize assets directly on chain. They also published a report in November of 2025 called Asset Tokenization 101. The report projects looking ahead into 2026 and beyond, they expect tokenization to continue to accelerate. Deutsche Bank is also developing the Dama 2, a tokenization platform. It's issued its regulated funds on a public blockchain. They announced crypto custody back in July of 2025. November of 2025, they also published a tokenization research paper. In December of 2025, they released Zero Knowledge Proof white paper with Nethermind. So why am I telling you this? Because they're connecting the pieces of the same institutional puzzle. Regulated institutions are adopting blockchain, but privately. AMINA Bank doesn't issue press releases about blockchain innovation. They just simply integrate with Ripple and start processing real transactions. Infrastructure providers like Nethermind are the unsung heroes. They build the technical foundation that make institutional adoption possible, compliance ready, enterprise grade, and production tested. Major banks are researching privacy preserving technology. Deutsche Bank isn't publishing marketing fluff. They basically published a 43 technical white paper with cryptographic experts. Institutional blockchain adoption is happening right now, not just through CBDs, not just through government mandates, but through practical infrastructure integration at regulated institutions. So here's some contrarian insight. Private blockchain banking is moving faster than CBDCs because institutions like AMINA Bank, Ripple, and Nethermind don't need political consensus. They need regulatory approval, which they already have, and the technical excellence. So, what does all of this mean for the future of European banking? The next 5 years of European banking won't be defined by CBDCs or wholesale disruption. They'll be defined by infrastructure integration. Banks will adopt blockchain payment rails the same way they adopt internet banking, gradually, then suddenly. Privacy preserving technologies like zero knowledge proof They're the unlock that makes institutional adoption possible. Without ZKPs, public blockchains can't meet regulatory requirements. The companies building that infrastructure, they're not the loudest voice on crypto Twitter, but Nethermind, they're not influencers. Ripple, they're not speculators. And Deutsche Bank, they are not retail traders. By 2030, blockchain based cross border payments, tokenized assets, and cryptographic compliance will be boring banking infrastructure, the same way SWIFT and clearinghouses are today. The question isn't will banks adopt blockchain? The question is will banks or which banks will build it first and capture the structural advantages? Based on what we've seen, European banks are positioning aggressively. I hope you enjoyed this session. Have a good evening and take care.